What's going on, y'all? Welcome back to the Financial Corner with your boy Buck Bandit P here on another episode of Financial Fridays. Man, y'all as excited as I am, man. Listen, man, I'm excited, man, because it's time to go shopping, boy. It is time to go shopping. The market is on sale. So, before we get into it, you already know, man, what we do here, man. We break down investing for average everyday people so we can go out here and get this money. But it ain't no shortcuts, no excuses, only progress. Ain't no quick flips over here, man. You already know, man. We building real lasting wealth. Also, if you want to get your free share, make sure you click the link down below. Get your free stock from Robinhood when you sign up, man, so you can get off the sidelines and actually start printing some money with us. You know what I mean? Like we really out here getting at a couple dollars. You know what I mean? Like we doing all right out here. You know what I mean? Like everybody looking scrambling and all right. If you tapped in, like we doing all right. We doing all right. So make sure you tap in with us and get your free stock. Also, if you want your free $100 with Allah, make sure you tap in, click the link down below. Get your free $100 when you open up a high yield savings account. Got to get that emergency fund on deck. If you ain't got an emergency fund, you might want to go do that before you start, you know what I mean, jumping in this investing bag. You already know. Tap in with that video. I dropped 4 things you should have before you even start investing. So let's get right into why everybody is here today, man. Financial Friday. What is going on in the market? The market is still red with more uncertainty. The market is still red with more uncertainty. You thought it was all right. No, it ain't all right. So let's see what's going on. So part 1, the big story. Oil is jumping out of the gym. We already know why oil is jumping out the gym, but let me run it down in case you don't, in case you've been under a rock. The biggest story is still oil. Oil prices have been climbing fast because of the tensions in the Middle East. It ain't no peace in the Middle East. We've been saying it for 26, we've been saying this since I was like 8, 9 years old. We just want peace in the Middle East. Like, that's all we want is peace in the Middle East. So I don't know if that's ever going, they ain't looking too good right now. So we already know the Strait of Hormuz controlled 20% of the world's oil flow. We already went over that. That was last week. We already went over that. So higher oil means higher transportation costs, higher manufacturing costs, and ultimately higher inflation, which we do not like. That is like kryptonite to investors, high inflation. So when this happens, investors start worrying about interest rates. Lead me to my second part. The Federal Reserve question. Right now, the main concern, the main question, everybody want to know on Wall Street is when the Federal Reserve is going to cut rates. Like, investors thought 2026 was going to see some rate cuts already. We thought we was already going to see one in January. Negatron didn't happen. You know what I mean? Jobs was looking strong. You know what I mean? Like, inflation it was cooler than expected. Like, go tap in with the videos. I've been recording it the whole time, been documenting the process. So if you following along, you can see how the Fed moves back and forth and how they hesitate to cut rates. So that's the main question. We already thought we was going to get the rate cuts. We didn't get them, but oil keeps rising and inflation is sticking around longer. So that means the Feds might keep rates higher longer than expected. So higher interest rates puts pressure on stocks because borrowing becomes more expensive for companies and consumers. So what happens when that happens? That means investors start believing rate cuts could be delayed, and that's going to mean I'm going to take my money out of stocks. That's all that means. If we think the Fed going to cut rates, most people, we not putting as many option plays in. We just doing our buy and hold, dollar cost averaging into our retirement accounts. We not really doing too much other stuff, extracurricular stuff, because the rates is high, and the stocks is going down. So why would we put our money in? We don't know when they're gonna cut rates. So it's kind of like you catching a falling knife. You already know, but we only doing that on good quality companies. You already know the motto around here. So segment 3 is bond yields are rising. And another thing that happens when bond yields start rising and treasury yields start climbing, That means big money is pulling their money out of the stock market and putting them into bonds where it's more safe. They going to get a guaranteed return on their money. That's all that means. And it just push the stocks down even further. Even further, and it add more selling pressure and more selling pressure. It's like momentum. And it keeps rolling down the hill. So what does this have to do with tech stocks? What this has to do with the tech stocks is because everybody was hype on this AI boom, and most of the tech companies that got hit the hardest was the most that was tied in with the AI infrastructure and artificial intelligence and all of that. So when the rates stay elevated, those high growth tech companies get hit the hardest because their valuations depend on their future earnings. Like if you understand about valuations of companies, like companies are evaluated by a multiple, and tech companies are evaluated at the highest multiple because it's a tech company and you could times it by 10 times its worth because tech is so forward looking because it's always improving and always getting better. However, with this AI boom and all of that happened, investors like, hold up, all right, I know we keep putting money in this, but y'all niggas ain't making enough money yet. Like we putting in billions and billions of dollars and y'all ain't making enough money yet. So we taking our money out of this tech stuff and we gonna put them in bonds where it's more safe and it's more you guaranteed a return on your money. So when that happens, now we seeing a cool off from that massive run of AI, which leads me into the next point, which is sector rotation. Now, just because the broader market, the S&P, even though the S&P is not down a lot on here, it's only down, I think, by about like a couple percent on the year at the time of this recording. But the major Mag 7 companies, they got hit hard. But it's still sectors in the market that are moving. I just went over it last week in my old video, but I'll go over it again. Energy stocks are going to benefit from all of this noise, especially the oil prices. Energy stocks are going to benefit from the oil prices. Also, I mean, to give y'all some energy stock, like me and Reno, if y'all tapped into the Buck Bandit podcast, me and him have a joint vesting account. And when all of this popped off, I was going to buy XLY, but I was like, no, I'm not going to do that because I see energy is running. So instead of that, we just bought some XLE. And it been up for like a week. Like we just got into it like a week or two ago, and we only up a couple percent. But we know that energy is going to benefit from all of the higher oil prices, and we don't know when this is going to be over. Also, another sector that's going to benefit, another sector that's been up, is defense. Why is defense up? Because geopolitical tensions often mean government gotta hire more military personnel and get more military equipment, i.e. LMT. If you've seen that stock, it's been running up. Why has LMT been running up lately? Because we had war and they have to get the military more war equipment. Bada bing, bada boom. We seen companies like Palantir running up over this. Even though, you know, Palantir, after I found out what they do, I really can't rock with Palantir. You do your research, you rock with them. But as far as making money, they've been printing because of the war in Iran and all of the geopolitical tensions. Meanwhile, sectors like airlines, travel companies are struggling. Why? Because oil prices are high, which means they gonna have, like now, their whole business relies on gas and oil. So now they got to charge more to the consumers. And so now their stocks are taking a hit because of that. So we have to understand what we should pay. With all that being said, we have to understand what we should be paying attention to, which leads me to the next segment. What investors should be looking at. Going forward, we're looking at three things. All right. First, oil. We cannot get past this topic right here. This is a major subject matter. It is a crucial pressure point. If oil continues climbing and it holds over $100 a barrel, inflation concerns will grow. Second, if inflation concerns growing, that lead me into my second point. The Federal Reserve will give us clues, like the Federal Reserve will need to give us clues on how long these rates are going to stay up. Like, they need to be like, all right, if this happens, then we're going to cut rates. If this doesn't happen, like, they need to start becoming more clear on when they cut, what has to happen in order for them to cut rates, so that way investors can see where to position ourselves. And the third thing you want to pay attention to is rising yields, because rising yields quietly tighten financial conditions, even without the Fed cutting rates. So, I mean, even with the Fed raising the rates, like keeping the rates where they at, like not cutting them, because what all that's going to do is keep big money out of the market, which is not going to make the market appreciate, we just going to be in this barcode mode, this consolidation mode. So the closing thought, man, on all of this, what's going on this week in the market, man. I know your portfolio looking hurt, man. I'm here for you. My portfolio looking hurt too. Like, I'm down too. Like, listen, you ain't the only one, all right? I know it's looking ugly, but remember, this is not a crash. It's not. If it was a crash, trust me, you would know. This is not a crash. It's a lot of stuff. Geopolitical, oil going up, inflation still up. The Fed don't know what's up. They never know what's up. They get on my motherfucking nerves. And this is just when we stay low and keep firing. We can't worry about the market going up and down. Like, it's volatile. The market being volatile, that's normal. We can't get caught up in the headlines. Like, this is where the motto is: stay low, keep firing. That's what we doing. We buying quality, and we just going keep dollar cost averaging into them until we can see the smoke clear and we can start seeing a little bit of what's coming down the line. But the key right now is staying focused on long term rather than reacting to what's going on right now. And that's your Financial Friday breakdown this week, man. If you found this helpful, man, you already know, share it with somebody and make sure you got your mind right when you're going out here and getting this money. You already know what it is, man. Thank y'all for being here, man. I'll see y'all next week.